the rupiah is being supported by valuation metrics rather than only short-term sentiment. The tension is that emerging market currencies still face dollar shocks, but rupiah fundamentals are acting as a buffer. USD IDR is the search lens here, but the useful read is narrower. Which confirmed details prove the story and which claims still need follow-through. The first thing to track is reserve data, because that is where the opening claim becomes measurable instead of just attention. This opening pressure is tied to reserves above $140 and that detail sets the stakes before any broader market reaction can be judged. The viewer value is knowing the exact pressure point before the louder narrative gets ahead of the evidence. The confirmed baseline is simple. Indonesia's foreign reserves are described above $140 billion, while the current account deficit is around 1.5% of GDP. That gives the story its frame without needing broad market noise. The number or status that matters most at this stage is 1.5% deficit cited, while Indonesian rupiah remains the actor or object carrying the story. This scene is about what is already on the table before the market, users, or regulators start reacting. It also keeps the timeline clean, because the next step only makes sense after the existing status is separated from the claims still waiting for proof. In this case, the baseline matters because stable range view is already part of the setup. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is what makes the headline useful. The mechanism is policy credibility plus valuation support. Bank Indonesia can lean on reserves and rates to curb excessive volatility. USD IDR matters at this point because the mechanism decides whether the event is durable, fragile, or still only a claim. In plain English, policy support is the working part of the story, and buy intervention capacity is the structural signal that shows why it can change behavior. If that mechanism fails, the headline loses force. If it holds, the story has a clearer path from attention to real consequence. That is why the mechanism has to be tested through reserve data, not through sentiment alone. The affected side is specific. Importers, exporters, investors, and regional FX traders are affected because stable USD IDR lowers hedging and inflation pressure. This is where the story becomes practical rather than abstract. For FX users, the immediate issue is hedging costs ease. That does not automatically prove a final outcome, but it explains who has to adjust first and why the event matters outside the headline. The practical readout is not about guessing direction. It is about identifying the group that feels the constraint, risk, or opportunity first. If that group does not react, the story may have less force than the headline suggests. The unresolved piece should stay separate from the confirmed facts. The open issue is whether external shocks, commodity weakness, or renewed US dollar strength test that support floor. That open point matters because viewers should not treat external shock as settled while still a risk remains the current status. The cleanest confirmation point is reserve data, since it would show whether the early evidence is turning into follow-through. Until that appears, the careful reading is to keep the event in view without turning the missing detail into a conclusion. This split protects the viewer from treating a plausible scenario as a verified result. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is concrete. The next signal is Bank Indonesia action, reserve levels, inflation data, and whether USD IDR volatility stays contained. For USD IDR, that means the story should be judged by USD shock, not by louder speculation. If that signal appears, the market or user reaction has a clearer basis. If it does not, the safer read is that the headline has not yet become proof of a lasting change. That leaves Bank Indonesia as the checkpoint and USD shock as the evidence line.